Greetings and thank you for joining us at FutureMoneyTrends.com. I have a very special guest for us today. He's somebody we've interviewed over the years, one of the most successful people you will ever speak with when it comes to investing in the junior natural resource space. You know, occasionally you get to speak to somebody who's successfully invested in a small junior stock for pennies, literally low $1 million market cap companies, and then they've turned into $1 billion companies. Occasionally you get to talk to one person who's done it one time. This guy's done it over a dozen times, perhaps even dozens of times. It's just you never hear of it. So I want everybody to listen to this entire interview. What he has to say is very important to your portfolio. He's been brutally honest with you. He has not sugarcoated it. Last we spoke to him, he only owned a single junior resource exploration company in this sector. That says a lot. He has been bearish on the sector. Of course, the last time we spoke to him, we were in the end of 2015. So we're here to talk to him to see if his thoughts have changed. Our guest today is legendary investor Carlo Savelli. Carlo, thank you for joining us.
Thank you, Dan. It's my pleasure joining you.
Well, Carlo, let's start off. You were very bearish last time we spoke to you. What are your thoughts right now on the junior resource market? And I also want to specifically point out the precious metal stocks. Are they in a bull market?
Well, I have to admit that I believe they are. When you interviewed me again at the end of 15, as you just said, I was bearish, and the gold price, of course, and coupled with the energy prices, which were going very low, showed that I was right. But being also a chartist, I could see obviously that in January, February, the gold charts turned around. The gold stocks went from a very highly oversold position to follow the gold price, which was showing signs of going up. And certainly in February, then we reversed positions and we played the gold market with 3 or 4 gold stocks only, relatively big ones that are obviously in production. At that stage, you don't want yet to get into the junior resources or the junior gold stocks. And we were very successful, I can say. And we also played the gold stock market through the JNUC, the 3 times gold.
Yes.
Listed on US, and also the HGU listed in Canada. And I have to say, though, that we are practically out of those now, because I can see that gold is just hovering in here. There seems to be no direction. If you look at the fundamentals, the gold producers are very heavily short, and the ETFs are very heavily long. And of course, I think only the next couple of weeks, maybe months, are going to tell us which way the market wants to go. The last time that the ETFs were this bullish was when gold was at 1900, and then it all collapsed, and the ETFs really were the ones driving the gold market down by having to unload all of their positions. And I think today we are in the same position again. Let's see where we go. Gold is moving up and down in reaction basically to daily input, either from the market about the Brexit, when it shot up $30 or $40, then it lost it all back again. Now we're in a sort of in-between and waiting to see who's going to win, the bulls or the bears. Meanwhile, of course, the whole market, the Canadian resource market, has had a tremendous run. We have also participated to a small extent in a couple of junior gold stocks that are actually drilling, have found resources, and like every good CEO should do, they have gone to the market and loaded up with cash, so that at least they all have the money now to really perfect their drilling plans and hopefully come up with some resources in the meantime. At the same time, we are obviously concentrating still on the one stock that you mentioned.
Well, let me ask you. So, the precious metal stocks are beginning all the glory, I guess, in 2016. What other commodities are you looking at that are also seeing a resurgence?
Well, in particular, we're looking at the zinc market, and I'm obviously not the only one. As you can see, there's Goldman Sachs out there, there's MMG, there's lots of good research reports being written about zinc, and in fact, the price has risen by some 47% this year. It appears to go back to basically what happened back in 2006-7, when the LME stockpiles and also the supply went down, and the price doubled or tripled. The price of zinc, doubled or tripled at that point. I can see that we are practically in the same position again. The market is showing signs of a potential market panic. That's a tough word to use, but it looks like it. The market is undersupplied, and one of the biggest underground mines just recently shut down. So the LME is down, and also the market supply coming from the mines is not going to be there anymore. So that is one market that we are concentrating on. Also because zinc is really a specialty play. There's really no or very few known pure zinc deposits. It usually comes as a byproduct of other metals. And we believe that this could be a really very big price increase in the next 2 to 3 years. I think this is a long-term play. And it's not like gold. It's not driven by ETFs or by speculators. This is really a metal that is needed for infrastructure. And here again, China is the driving force right now. They have announced that they're going to make large investments in infrastructure. They need to stimulate their economy. And so zinc appears to be in the best placed metal at this point to go into bullish supply dynamics. And there is also weak refined supply growth. And all of this put together really leads me to believe that the one stock that we invested in is the one that's going to benefit most in the next run.
Well, let's talk about that stock. So for those who have not heard our Carlo interviews, we interviewed Carlo in the spring of 2014. A man by the name of Max Porterfield, a mutual friend of ours, just took over a company called Calnex Mines. At the time, I want to say the stock was around 20 cents Canadian, and we have been doing updates with Carlo since, about every 4 to 5 months. And I want to say the second interview we did with Carlo was at 25 cents, and the most recent one we did at the end of 2015, Calnex Mines, was at about 30 cents, or maybe even early 2016 was about 30 cents. Today, as we do this interview, it's around 40 to 41 cents. So, Carlo, let's talk about Calnex Mines. What have they done since the last time we spoke in very early 2016? And here we are in August of 2016. What is an update on this company?
Well, the company has moved in, as I said before, in what I believe to be the right direction, where we have also been able, and Max, I must say, has been very, very successful in also raising money in this whole resurgence of the resource market, the junior resource stocks. He's been able to go out and raise, I think, over $4 to $5 million just recently. So the company is fully financed at this stage. And he's been moving the company into the zinc market, again, because we thought that there would be an undersupply and a shortage in the market. And as such, we wanted Calnex to be at the forefront of acquiring zinc deposits that are in known mining districts, all of them, of course, in Canada. So no exposure to any emerging markets or any problems in the emerging market. And in particular, we wanted the company to be ready even when the big guys want to buy zinc mines that have quick timelines to production. And I think Max has been exceptionally successful in doing that. I just want to point out that Callinex, for example, just acquired over 2.7 billion pounds of zinc equivalent, and the zinc now at $1, and the market cap only at 20 million. You can make your own assessment of what the company could be worth once these mines or these deposits are moved into or closer to production. And I think that we are at that stage now. For example, there's two exceptional deposits, one being the Nash Creek project. It's a perfect example of what Max is doing. And it has a large low-grade resource based near mining infrastructure, existing mining infrastructure. And what Max is doing is he wants to leverage the underlying metal prices so that the company will have a huge impact once the market realizes that it's probably one of the only companies that has a total focus on zinc. And for example, second one, the Superjack project, which is only 15 kilometers away from one of the largest underground mines in Canada again, and which recently shut down, which is one of the reasons why the zinc price has actually risen. And it's in similar geology, and we believe this could be a very big winner again. And then thirdly, Callinex is also drilling near Flin Flon, again an existing mining district which has produced gold and zinc and copper over 100 years. And there, of course, is the Hudson Bay mining smelter, and it's running out of feed. And so this is a wild card, of course. We don't know what's there yet, and Callinex has a drilling program in place. So we will know within the next 6 to 9 months what we have. And Hut Bay is obviously watching the company closely, also because of other projects that we have near Hut Bay's mine up there. And so what I believe we have here is basically a call on the zinc price. It's an out-of-the-money call at this point, but we obviously believe it to be in the money within the next couple of years. And again, let me reiterate that zinc is not speculative, it's not driven by ETFs, which can move one way or the other. It is a metal that is really needed by the world, by infrastructure plays, and we believe to be there. So this is one of the most exciting junior resource companies that I have invested in, that we have a big position in. We are constantly providing input into the management, although Max is very well in a position to make his own decisions. And I know that he's out there right now looking at other opportunities to acquire other zinc deposits. And we are willing, obviously, to provide the cash to do that. And I think we're sitting on a great stock and a great future for the company.
Yeah, no, an incredible opportunity. I love it. It's a zinc call, essentially, on the zinc price. And certainly one of the best performing zinc companies out there. Like I said, we had first talked about this at 20 cents. It's literally doubled. Now it's at 40 cents Canadian. You can buy shares at CNX on the TSX Venture or using the symbol CLLXF on the US side. Carlo, I also should disclose that I am a significant shareholder, at least relative to my net worth. So I own shares of Callinex Mines as well. Carlo, before we go, I always like to talk to you about the macroeconomic trends. And let me just throw this out there. If you were a U.S. central banker or a European central banker, What are you looking at right now that might be keeping you up at night?
Well, I think I pointed this out a couple of times already. I think that we are in uncharted territory. The central banks really don't know themselves what the hell to do, and they keep on deferring raising interest rates, which in my opinion is a mistake. I don't think that a small increase in interest rates over time would kill the economy. It would probably dent the stock market, but that's not what the central bank should be concerned about. And you can see that the markets are running, but they're running on just cheap money, on cheap fuel. The underlying economics are okay in the U.S., and this is certainly still the market that we are concentrating on, whereas Europe is still in the doldrums. And I think Brexit has obviously added another problem, which is going to stay with us and with England for the next many years. In my opinion, it's a very, very negative sign that they chose to have the Brexit. And once again, it was basically the urban elites not or being overwhelmed by the underemployed and by the people out in the Midlands, in particular in England. And it shows that the government doesn't really know what's going on in their own country. You can see also the stress test, which just passed in the last 2 weeks, where strangely enough, all the banks seem to pass, except for a handful. And the handful that have problems are mostly in Italy. And if you had applied some stricter rules to those stress tests, I think that practically all of the Italian banks would have failed, because their only asset that they have is really Italian government bonds. So I don't know how you can value that, and particularly like a Monte dei Paschi di Siena, which has their only asset is Italian government bonds. One should have at least applied a haircut to that, which would have shown, of course, the bank to be totally bankrupt, not just a little bankrupt as they seem to be now. And if Italy doesn't want to do any bail-in for political reasons, they keep on pushing their problems out, as they have always done in the last 20 years, and it can only lead to a bigger collapse. So, as I said, I believe in my first interview with you, let's enjoy the markets as long as we can. I think the reckoning will come. And again, nobody, in my opinion, nobody seems to know how to get out of this. Everybody I talk to, people that have made money in industry and in the markets, are all scared of the end game. And to be honest, I would not want to be a central banker now. You can see Draghi in particular in Europe has problems with the Bundesbank. The Germans, of course, are totally against the QE, but they had to go along because he just did it. And I wouldn't want to say that he does this because he's Italian and he wants to save the Italian banks, but there's certainly some truth to that. And here we are. Europe cannot increase the interest rates because the European economy is really not doing well at all. And with Brexit coming in, also Germany will have problems because they will not be able to export as much as before to England because of the low pound. England, at the same time, has problems that they can only overcome by doing competitive devaluations all the time, adding, of course, to the inflation, because as we all know, until 10 years ago, England was a net exporter of energy, whereas now they are net importers. So the lower their currency goes, the more their energy bill goes up. So it's not a nice view from the outside. But, as I said, let's enjoy it. Let's play the markets, and let's make money for as long as we can. And as you know, we can make money both ways.
Sure.
You can also go short eventually.
Absolutely. I've heard Rick Rule often say one of the lessons he had to learn early on was inevitability does not necessarily mean imminence. So, Mr. Savelli, legendary investor, we've done very, very well listening to you, and we appreciate your time and hope to talk to you again very soon.
Thank you very much. It's been a pleasure, Dan.